Konnichiwa and Salam Alaikum. In this week's edition we'll talk about the corporate news and also AABAR's first half result, which has just been announced last week. In corporate news this week, DP World has entered into a partnership with Brazilian company Obratec to acquire a majority stake in Brazilian ports terminals company, otherwise known as Embraport. The fully developed facility will have capacity for more than 1.5 million TEUs and handle around 2 billion litres of ethanol per annum once it's complete. The port expands DP World's footprint in South America in addition to its ports in Peru, and also, importantly, gives the company leverage to the growing ethanol industry in South America. We maintain an overweight recommendation on DP World and a price target of 48 cents. Recent spike in the share price up towards 45 cents gives investors a chance to take and book in some profits from entry points at lower levels. We have initiated coverage on First Gulf Bank this week with a price target of 19.2 dirhams and an overweight recommendation. First Gulf Bank trades on a forward PE multiple of 7.5 times earnings, a discount to its peer average of 8.5 times earnings. We believe that the bank deserves a premium to peers given that it has a more resilient deposit and retail franchise. It has a diversified earnings base across income and non-income generating revenue streams. It has a quality customer base around local Emiratis, and also has support from the Abu Dhabi government. We've also initiated coverage on AABAR, which is a construction company listed on the DFM with an overweight recommendation and price target of 4.18 dirhams. Although we believe that the construction cycle has some further room to bottom out in Dubai over the next 6 months, AABAR continues to diversify around the MENA region with new projects in Saudi Arabia, Qatar, and currently tendering for new projects in Algeria and also Oman, really diversifying the earnings base of AABAR across the region. AABAR's project backlog at present is 16.6 billion dirhams, with potential upside of another 12 billion dirhams depending the outcome of the tendering for projects in Qatar and also the large Gazprom project in Russia, which Gazprom has begun testing the soil on in the last 2 weeks, and indications suggest that the project has a strong chance of going ahead during 2010. The highly anticipated Dubai metro system is due to be open today and beginning running tomorrow, with the first 10 out of 29 stations in operation. Despite all of the fanfare and all of the publication around the system, it is a very effective network running from one end of Dubai to the others and including stations along the way at all the core landmarks, being malls, corporate and also residential areas. The detailed network has been helped put together by crucial construction and service companies Mitsubishi Corporation, Mitsubishi Heavy Industries, Obayashi and Kajima over the last 12 to 18 months, and with it coming together we expect that property prices in key areas around the metro system will rise. The company most set to benefit from these rising property prices and higher demand for specific areas around the metro is AABAR, with a significant portfolio of corporate, residential and also shopping mall space across the metro platform. We believe that more support for property values will flow through to rental income and service fees for AABAR, which at the moment comprise around 20% of its revenues. Air Arabia has today announced a joint venture with Egypt-based travel company Travco. Travco is a very large integrated travel and services company with annual turnover in excess of 1 billion euros. The joint venture plans to open a hub in Egypt, which is around a 3-hour flight from Dubai, and from Egypt to Air Arabia's second hub in Morocco is around a 3.5 to 4 hour flight. This third hub gives Air Arabia access to new routes in Eastern Europe, the Stan regions, and also North Africa, and helps link up the existing two hubs. Although details have not been fully disclosed regarding the deal, such as capital expenditure, the amount of flights, and the timing of the new hub, we believe that it is a net positive for Air Arabia and supports the company's growth profile, particularly in emerging markets where demographic really supports growth in low-cost carrier. AABAR Investments, listed on the Abu Dhabi Stock Exchange, announced first half 09 profits last week. Total comprehensive income of 1.7 billion includes losses on puts and collars and other derivative products of 2.2 billion. The company's net income gain comes from investments it made in Daimler and Atlantia groups earlier in 2009 at very low prices. AABAR also sold Pearl Energy for 3 billion dirhams, purchased Falcon Private Banking, formerly an AIG bank, for 1.1 billion, and also made 4 billion dirhams worth of property purchases during the first half. Gauging by the sell down on the stock last week, the market doesn't really understand here the high net capital gain position that AABAR has on its investments in Daimler and Atlantia, which total 5.4 billion dirhams, or around 1.75 dirhams per share as at early September. Therefore, we believe that investors with a slightly higher risk profile and the ability to hold the investment over a 12-month period can be rewarded with investing in AABAR, as the capital gains in those investments are realised over time. That's all for this week. Dom arigato and sayonara.